Twitter's down over 20% today. Really bad day for the social media giant. 20%. That is a huge sell-off. People are getting rid of this stock like hotcakes, just throwing it out. Please take it, even if I sell it at a loss, just take it. Now, not everyone's selling it at a loss. I'm being a bit hyperbolic here, but the stock is down 20%. And for a major company like Twitter, that is a huge number. Is this a get woke, go broke situation? Twitter doesn't seem to think so. They're blaming this on bugs for the most part. So get ready for that. This will be interesting. Let's take a look over at TechCrunch and see what they report. Here we go. Twitter today reported its earnings for the quarter that ended September 30th, and the numbers delivered a big surprise. Falling on both sales and earnings per share, Revenue came in at $824 million and EPS at 5 cents. That represents sales up 9% year over year, but far below what analysts have been expecting. This is non-GAAP accounting. For those of you who don't know what that is, GAAP is generally accepted accounting principles, and generally companies like to stick with GAAP as far as I see. So this is non-GAAP, but it is what it is. EPS of 20 cents per share and revenues of $874.03 million. The stock is down around 20% in pre-market trading, and not just in pre-market trading. Let me pull up a website here. You're looking at TradingView. The market actually closes in just under 10 minutes from when I'm recording this. But you can see the market is still active, and this thing is trading at $30. It's actually slightly cut off, but it's trading at $30.63. Yesterday, this was trading at $38. Now all the way down to $30. So huge selling off there. You can just see the giant gap, not GAAP, literally a gap this time. So for a while, Twitter was trading in this range, right? Between $37 and about $40. So floating around $37 to $40, pretty strong. And that was going on, man, all of October here so far. And then boom, huge news today. Major selling off, high volume, lots of people getting rid of this stock. And it's only looking worse. It's actually now down 21.16%. So it's over 20% now, down 21.16% as the time of me recording this. And we'll see. It might continue to sell off after market as well. Maybe it'll make a bounce back, but this is not looking great. Getting back to the write-up, let's continue on. Twitter said the huge drop in performance was impacted by revenue product issues, which we believe reduced year-over-year growth by approximately 3 or more percentage points, and greater than expected seasonality. Specifically, it also noted that it discovered and took steps to fix bugs, primarily bugs that affected their legacy mobile application promotion map product, impacting our ability to target ads and share data with measurement and ad partners. Also, its ad tech personalization was not operating as expected. It also blamed the bad numbers on a slower summer for big events and launches compared to a year ago. I mean, that's a pretty bad excuse. There weren't as many big events in the world, so our stock is down. You know, if your stock's going to get affected that easily, don't know if people are going to want to hang on to it. Just saying. Meanwhile, monetizable daily active users came in at 145 million versus 124 million a year ago. So they did have growth there. Net income came in at $37 million, which is awful. For a major corporation, they made $37 million. That's what their net income was. Everything else wasn't profitable. How embarrassing is that? We drove strong growth in monetizable daily active users, up 17% YOY, driven by ongoing product improvements, said Jack Dorsey in a statement. We're continuing to improve relevance while testing ways to make it easier for people to find out what they are looking for on Twitter. We also continue to make progress on health, improving our ability to proactively identify and remove abusive content, with more than 50% of the tweets removed for abusive content in Q3 taken down without a bystander or first-person report. So they state right here, it seems, Jack Dorsey says half of the content removed on Twitter was taken down, I guess, by a bot or an algorithm. That's the implication there. Wasn't reviewed by a person or reported. Let me actually read that one more time. They're not saying it wasn't reviewed, right? Let me see here. We're continuing to improve relevance while testing ways to make it easier for people to find what they're looking for on Twitter. We also continue to make it progress on health, improving our ability to proactively identify and remove abusive content, with more than 50% of the tweets removed for abusive content in Q3 taken down without a bystander or first-person report. Okay, so maybe it gets reviewed still. It's just not originally reported. Weird. So either the algorithm just takes it down, or the algorithm, I guess, flags the content and an employee will review it. Something like that. Ned Segal, CFO, spoke more directly to the disappointing numbers. Some quotes. Despite its challenges, this quarter validates our strategy of investing to drive long-term growth. More work remains to deliver improved revenue products. We will continue to prioritize our ad products along with health and our investments to drive ongoing growth in MDAO. We remain confident that focusing on our most important priorities and delivering high-performing, better ad formats will deliver better outcomes for all our stakeholders for years to come. Now, I gotta say, man, when I look at the amount that Twitter charges to run ads on their site, it's a bit baffling to me, honestly. It's really expensive. I think there's other platforms that are way more, that look a lot more appealing, but it is what it is, I guess. The company has made a significant shift in the last year to tracking a new user metric of its own making, monetizable daily active users, which tracks those who are being served ads. Twitter's argument is that these are the main users to watch since their growth or decline is more closely linked to how Twitter's business is doing. Well, on one hand, yes, because they are monetized in their words. But on the other hand, if that number is really small, of course you're going to want people to be using the platform. So even if some are not technically monetizable, they still give you numbers and they still give you content on Twitter. I mean, let's say everyone left except the monetizable users. Would there be enough to really maintain content on the site? I mean, maybe, but definitely not at the scale that it is now. And I imagine business would certainly be negatively affected. You know what I mean? Like, would they want that trade-off? Let's say 100% of your non-monetizable people signed up to Twitter will be removed, but we'll give you guys 10% more monetizable ones. Do you think they'd want that trade? I don't think so, but who knows? Moving on. Let's kind of skip down here a little bit. The U.S. continues to be Twitter's largest single market, but is still outweighed by business outside those borders. Average U.S. monetizable daily active users was 30 mil compared to 26 mil in the same period of the previous year and 29 mil in the previous quarter, Twitter said, while averaging international MDAU was 115 mil compared to 98 mil in the same period of the previous year and 110 in the previous quarter. Ad revenue up 702 million, up 8% year over year, with data licensing and other revenue coming in at 121 million, up 12%. But they still barely made that much of a profit. I mean, in comparison, I have another site here. Let's take a look at this one. All right, you're taking a look now, or if you're not watching, I'll explain what we're taking a look at. This is the income statement for Twitter. All numbers in thousands, of course, and let me move myself out of the way. So if you look down here at the bottom at their net income, where's my mouse? There we go. Net income, you can see here, 36,522 in thousands. So this is 36 million. All right, 36,522 in thousands. I'm going to go with that because it's easier to say. And previously reported, 3 months ended September 30th here, previously reported $789,179, again in thousands. So this is down so much. This is insane, actually. To go from 789,179 to 36,522 is pretty insane. Now, of course, we could analyze the rest of this, but it would take a while and get nitty-gritty. Instead, let's go back to the articles. And we already know what Twitter is alleging the reasons for this to be. But regardless of the reasons, the numbers paint a very clear picture that Twitter ain't doing so great right now. One more write-up to take a look at, this one from MarketWatch, but I do want to hop over here because their write-up here provides a little more insight. Let's take a look from the top. In particular, management highlighted an issue with questions that the company poses to new users. It also asks whether Twitter can use device settings to show them ads, but that feature didn't work as expected, so Twitter turned off the setting. It also experienced challenges with a question that asked if Twitter can share data with measurement partners, who then reported to advertisers that want to measure the effectiveness of campaigns. That question also contributed to challenges, and Twitter turned off the setting as well. A quote, "Although we are working on remediation, there isn't remediation yet in place, and so the effects of that will continue into Q4. Oh, wow. CFO Ned Segal said on Twitter's earnings call. So they're already prepping shareholders up for another poor performance in Q4. Isn't that wonderful? Not a good look. For the third quarter, Twitter is calling for 944 million to 1.01 billion in revenue, below the 1.06 billion consensus. Management cautioned that these issues could have a full quarter impact this time around, compared with only a partial quarter impact in the third quarter. Earnings missed expectations as well, with Twitter posting 17 cents in adjusted per share profits, down from 21 cents a year ago and below the 20-cent consensus. The challenges on the ad front sparked new questions about Twitter's... All right, we'll skip this part. This is still some old news. But it looks like that's where we're at. They talk more about the bugs here. We already covered the claims of their bugs and all that sort of thing. But finally, they end with the analyst saying to hold the stock. But, you know, man, I personally would never recommend really looking at an analyst's opinion. I think it's better to make your own opinion. And that's just my opinion. That said, I'll be wrapping this report up. Want to give a big thanks to those kind people promoting my last video. I'm just not going to be giving shouts out yet because that was only about an hour ago. So if I give them now, I will certainly be missing some people. But I am going to try to get a third video out today. I'm actually really looking at producing more and more videos on this channel. The problem I have is that since I try to stream daily, I'm down the notification by default. You get, in general, on YouTube, 3 notifications a day. And I say in general because they randomly change things. And you got to figure it out on your own for the most part. So with 3 notifications a day and me streaming daily, that means I can only really make 2 videos a day if I want notifications to go out for everything. So I don't know, man. I'm thinking of maybe streaming on Twitch more often, and then I'll have that notification back, or making a second channel for more content. I don't know. I just know there's a lot I want to talk about, and I'm limited on how much I can do if I want to utilize the 3 notifications. So it is what it is. If you guys enjoyed this video, though, please consider sharing it, commenting down below, liking the video. All that stuff shows engagement, and it certainly helps out. And if you'd like to help more directly, consider becoming a sponsor on Patreon, link below, or getting some merch over in the Teespring store, link below for that as well. With that said, though, hope you guys have a good one. I'll see you in a few hours.